I would expect that we will see more people opting for an adjustable rate mortgage in a rising interest rate environment. And listen, if it makes sense for them and it's the right decision, then I'm not here to say they shouldn't do it. But we know all the, it's in the rear view with adjustable rates and other things like that in the past. I think we'll see that start to pick up here in this environment.
Welcome, everybody. It is a fantastic day. It is April 1st, April Fool's Day today. So what kind of tomfoolery are we going to get into with my buddy David Childers from Keeping Current Matters? David, what's happening?
Gosh, a lot happening. I mean, a lot of foolishness going on out there. We're going to talk about a lot in the market, but always love to have everybody that joins, watching people join right now, Johnny, not only here on the webinar, but in LabCoatAgents. So let us know what's been the best April Fool's joke you've seen, Johnny, or anybody on the line.
Oh, my favorite one is the one I posted, that EXP bought Keller Williams for $5.3 billion. Somebody will believe it.
Yeah, it's not that far away from people thinking that's outrageous, so.
Right. It's a crazy time, man. And, listen, man, we've seen weirder things, but there's nothing that led me to that. There's not a shred of evidence or hearsay or anything. I just did that just to mess with people. Yeah, that was a good one. Zero good. Down FHAs getting accepted is another good one.
Oh, very interesting. Very interesting. So,
it's not a joke. Prices are going up.
Yeah. We're going to talk about that today. Yeah. We'll talk about that. Pending sales are down. Prices are going up. How do you make sense of it all? I'm going to bring a little bit of a spring market update. And then, Johnny, something good that we can do together. We always talk about having the facts, having a relevant market opinion based upon facts. I'm going to give you some historical data of when we've been in similar markets where interest rates have been rising like they have now. We've seen tremendous rise in the last 3 months in the average 30-year fixed, but we'll talk a little bit about that in similar markets in the past. What has happened to home sales? What's happened to prices, so that you can form your own opinion about what you believe is going to happen. So a lot of questions about that though right now. What do people think is going to happen in this real estate market?
Right. A lot of people are talking about it's funny because the newspapers, the media, the newspapers, whatever they are called these days, right? The whole news organization, their job is to sell clicks, right? They're advertisers. That's all they want is traffic and clicks and everything else like that. So oftentimes we'll see headlines and it's like, oh boy, here comes the market crash. Listen, I'm worried about that, but I'm worried about it every single day. And I'm worried about it before this even got into any of these discussions and things. If our economy continues to take hits or anything else like that, these are real probabilities. But the thing is, there's just no inventory still, right? Don't listen to the headlines that there's a market crash and sales are down and the buyers are pitting out and everything else like that. We're going to talk about some fun stuff around that too, aren't we?
Yeah. Well, I think let's talk about that, Johnny, and I'll share some slides here in just a minute like we always do. And again, if you're on the call, I'll give you these slides, use these to educate your market. And, I've thought a lot about this, had a lot of conversations with people about it. Johnny looked at a lot of information in the last few days, weeks, months, in this fever in the market. Do I believe that will last? The frenzy? No, I don't believe that will last. Mm-hmm. Do I believe the market is going to crash? No. Do I think it's going to slow down at some point? I can't see anything right now that's going to cause that. That's what I'm struggling with. But let's hop in. Let's look at some slides, and I'll show a couple, giving a little bit of an update, Johnny. We can talk about those. But probably the biggest, headline or talking point is pending sales down, having been down for the last several months. This just gives you a little bit of perspective of, upper left as it's measured by NAR, 100 being a historically healthy level. We came in February of this year. You see on the slide in the top right, 100.9, 104.9. Still ahead of what would be considered a healthy market in pending home sales, down over the last couple of years. down across each area of the country. And so you start to see that. And it's been a lot of headlines written about this saying pending home sales are down. That's an ominous sign for the housing market. Here we go. Things are about to crash. Well, let's start to break that down across the market. The first thing we look at in February is the latest information we have here from our buyer traffic is way up in the very strong, to strong category. So we know buyers are out there. Now, I'd love to see in the chat if somebody's listening or comments. If somebody's like, no, you know what? I'm seeing buyers start to walk away. And there's no doubt buyer fatigue in the market. And buyers that say, we've been trying to do this, for quite some time, and maybe we're going to take a breather for a little bit. But buyer demand is still very strong. If there was a listing and you called somebody up and you said, hey, I think we can get this, no doubt we would have buyers for it. Certainly if you said, hey, I think this is not going to be a multiple offer scenario, I think you'd have buyers for it. So we can see demand being very strong. The challenge has been with listings. And in March, this information just came out, active listings increased for the first time in 6 months.
Wow.
So think about that, Johnny. Since really the fall of last year, since September, active listings have been depleted, to a point lower than even where we started off last year. Very low in active listings. So a lot of demand, a lot less listings. That's your reason for pending home sales being down, not a an ominous sign of buyers saying we're out or anything like that. And in the reverse is true for sellers right now. As we look at that map for buyers, seller traffic is weak to very weak all over the country.
Yeah, up in New England where I'm from, we're trying to keep everybody out. That's why nobody's selling.
Yeah, I think that's leading to more of what what the cause is. And go back here, active listings. We want to see active listings start to grow. It's interesting when you think about active listings. We were looking at this graphic just a minute ago. I just saw another look at existing listings and new listings by month. And for March, the first month, new listings exceeded active listings in the market. And we've heard that joke. There's 382,000 active listings in the market. Johnny, how many agents are there in the country?
Or like 1.5 million.
Yeah, 1.5 or 6 million agents. Very few listings across the country.
Yeah.
To reinforce this point, demand showings are at certainly a considerable high. This is a look at the February's going back prior to the pandemic, February of 2020 and 2021. We're higher than that. And all of this is causing prices to rise. You kind of alluded to that as we got started and said, hey, prices going up, what's going on there? And I'd love for in the chat, even if anybody wants to say, what do you see happening in your market with buyers, with sellers, with prices? But all this demand is driving prices up. Quote here, last fall, we observed that home prices, although continuing to rise sharply, had begun to decelerate. Even that modest deceleration was on pause in January. 19.2% year-over-year change for January is the fourth largest reading in 35 years. So 19.2 according to S&P, 19.1 according to CoreLogic. So a lot of appreciation starting to tick up, and that's a testament, Johnny, to the enormous amount of demand that's out in the market and the lack of available homes that are on the market. So,
well, in sixth grade, we learned that when the demand is high and the supply is low, the price goes up, right?
Yeah.
And that's what we're seeing. This has been the same story for the past 2 years, right? But it seems like it's getting tighter because that one of the first charts you showed with the new listings or the active listings or whatever, there's just not a lot of inventory, right?
Yeah.
I'm looking at building a cabin myself, a different one, on 50 acres up in central, almost in Canada, Maine. And I'm just like, my God, I used to be able to do this about $80,000. Now it's going to cost me twice as much. So even land in a remote area is going up.
Yeah. Yeah.
And
And I
materials
think
too.
it's causing the speculation in the market. What would stop all of this? What
Mhm.
would, be the shift in the market? And certainly rising interest rates that we've seen, I think will contribute to moderating the market. But even where we're at right now at a 30-year fixed at, you know, middle fours, knocking on the door of five, certainly not going to cut off demand in the market. So I think that is the question. What's out there that could squelch some of this frenzy in the market? Many people asking that. I'm not suggesting I have an answer for that today, but that's the question on a lot of people's minds.
And the interesting thing is, right, with the land usage policy changes and trying to get more green and reduce our carbon footprint, they want to build more walkable communities, they call them. Listen, conspiracy theories would say that they're trying to get everybody in one area, right? So hear both sides of it, but they're trying to get more walkable communities. So I would be looking at that and saying, where is an emerging area, right? Where is someplace? There's a great place down in South Carolina, just outside of Myrtle Beach. I can't remember the name of what it is, but it's an old decommissioned Air Force base.
Hmm.
And they went in there and they built a town center with restaurants and stores and all the other commerce, and then they build out from there. Where's the next project like that? Where, in your particular area, because inventory is so low. I have a broker friend of mine. They've been working on this project for 5 years, just finally got it approved. And when we're looking at the numbers years ago, it was 250 per unit. Now they're up over 500, right?
Mm-hmm.
So thanks to appreciation for that. But where is there an emerging market? Listen, as an agent, you gotta, those who create products and industry are the wealthiest. And what I mean by that in our industry is, how do you create listings, right? Because we're seeing it right here. A lack of inventory is causing this price, right? And there's no signs that it's going to slow down. So,
Yeah. No,
what
I
else?
think you're right, Johnny.
What
And
else
I
do you
think
see out there?
I think the first home market in the future is going to be a lot of condos and a lot of things for townhomes and attached type deals.
Mhm.
And I think we're going to see that trend. But probably the other big question, trend thing happening in the market is the rise in interest rates. You and I have been talking about
Oh
this
yeah.
over the last several calls that we've done. The KCM research team's done a phenomenal job going back in time and saying, what happened in real estate when we were in a similar trending environment. And so I want to break that down for a few minutes. And I think this is the part of the call, Johnny, where we talk about, developing your market opinion.
Mhm.
And I always say this with what we do at KCM, this is to give agents the basis to develop your relevant market opinion based upon
Yeah.
fact, right?
Yeah.
I'm going to present everything that our team has developed on interest rates, and you don't have to agree with it. But I do want you to look at it and say, this is what's happened in prior markets. It doesn't mean that what's happened in the past is going to happen in the future, but we should be informed by it to say, what does happen in prior markets when we see interest rates rising. And, I can't remember if we talked about it last week or 2 weeks ago, Johnny, what happens to home values when interest rates rise? There are a lot of people that think home values go down. Well, let's look at that. Let's say what happens in those scenarios. So let me give you a breakdown of that. It'll be no doubt a good conversation that you and I will be able to have. But again, I want to stress, it'll give you the basis to make your opinion as you share this with other folks. So I will start off here with the most recent, as of yesterday, Freddie Mac in their weekly mortgage monitor, the average 30-year fixed. This is rear view mirror, 4.67%, knocking on the door of 5. Certainly, there's going to be differences in rates as we do this, but we're right there at almost 5%. Says that this mortgage rates will continue to move upward in the face of rising inflation, prospect of strong demand for goods, and ongoing supply disruptions. Purchase demand has weakened modestly, but has continued to outpace expectations. And this is largely due to unmet demand for first-time home buyers, as well as a select few have been waiting for rates to hit a cyclical low. So what's at play in the rate market right now? Certainly the instability in Ukraine and Russia, the rising inflation that we've seen, that is at play, driving rates higher, in the Fed. The Fed said they're going to scale back their participation in the bond market, and they've said they're going to raise the Fed funds rate in the coming year. Those are all things that are at play right now. They're driving rates higher. Interesting perspective here from Lynn Kiefer from Freddie Mac. He said mortgage rates are likely to continue to move higher throughout the balance of 2022, although the pace of rate increases is likely to moderate. So what he's saying is, all right, we saw this giant rise, 3.1% where we started the year. We're now knocking on the door of 5%, 4.67. What did I say? 4.67 here. But we're likely to see it rise, but not at that pace. He goes on to say this is important. Much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with the Federal Reserve interest rate policy. What he's saying there is we've seen this sharp rise in rates and sort of the market pricing in what they believe is to come. That's an important point to notice. Now, who knows what the Fed's going to do? They've said they're going to raise rates. They're speculating on by how much and will they do it each time? We don't know that. But the market's saying we expect them to do that. And so rates have reacted to that. What does that mean? That's the classic example, Johnny, when we see something happen and we don't see a dramatic move in the markets because it's already been priced in. Now, I think that's good news for us in real estate, that we're not going to keep on this rapid ascent in interest rates. So I mentioned our team has gone back and said, what happens in prior markets? Let's start to take a look at that, because I've got a breakdown of these markets that we've been in prior to sort of show you that. So first one is what happens to interest rates in rising interest rate what happens to home prices in rising interest rate environments? Well, you go back to the early 90s, every time we've been in an environment where mortgage rates increased by greater than 1%, home prices have actually gone up. Many people think that maybe they've gone up. You see right there, you want to look for the red, but I've got it outlined in red, but it's all green right there, on average by about 8%. Why is that? A lot of times when rates go up, you see this drive of folks that come into the market and want to get a home, want to buy a home before rates go up any further. So it causes a little bit of increased demand. But certainly when we've seen markets like this, rates have increased. Now, again, you can develop your own market opinion based on that, but that's what's happened going all the way back to the early 90s in rising interest rate environments. So let's look at the same for home sales. A little bit different picture here with home sales. What's happened in rising interest rate environments to home sales? Well, you see a little bit of a mixed bag here. Sometimes, prices going down, one-time prices going up, 2% down, 2% up, kind of negligible, but a couple of times rates going down dramatically. First in the early 90s, home sales dropping by about 11%. In the mid 2000s, 2005 and 6, we see home sales dropping dramatically. That's the beginning of sort of the housing crisis right there. But I would call into question the first one, the early 90s, what happened in housing there, because what we saw was the increase was a little over 2.5%, but the final rate was 9.2%. That certainly would start to slow down the sale of homes. Let me be clear. Nobody's calling for that right now. Nobody's calling for interest rates to knock on the door of 10% here, this year. And so I think we have to look at that. We have to go, okay, I kind of get that. Other times outside of the housing crash, home sales, it's been a small impact, I would argue. 2% up 1 year, 2% down 3 years. Certainly has an impact, but probably moderates the market relative to home sales. So what happens in these environments? Prices go up, home sales start to moderate. No, by the way, we've sold more homes the last couple of years than we have in quite some time. Great years in housing. So I think all of this bodes for, making the case that, we're likely not to see this dramatic impact of rising rates. And oh, by the way, what you just said, Johnny, I think is probably one of the most impactful things is looking at where we at in inventory. We talked about it on the front end. In a lot of these markets, I've highlighted it here, we had considerable more inventory in the market than we did at those times. If a house comes on the market today, it's going to sell immediately. That's the bottom line. I think we will see the market moderate with rising interest rates, but I don't see a scenario where things are going to fall like maybe in the 05, 06 range, where home sales fell by 14%, because we just don't have the inventory. There's so much pent up demand, so many folks that want to buy that can't buy right now, have been frustrated with the market. As soon as we get more inventory, expect those people to sort of come back in. They're going to say, gosh, we can buy a home now, and we want to do it. A little bit of breakdown here from NAR. While higher short-term rates will push up mortgage rates, they're talking about the Fed funds rate, I expect some of this impact will be mitigated eventually through lower inflation. Thus, I expect the 30-year fixed mortgage to continue to rise, although we aren't likely to see big jumps that occurred over the past few weeks. Again, talking about what we started off this with, rates are going to rise, not at the pace that we saw, and lower inflation over time will help to combat higher rates. Now, I think that's the question. I don't think inflation is going to be lower tomorrow, but at some point, we got to believe they'll get inflation reined in. Freddie Mac says this: history suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. Freddie Mac analyst shows that a 1% increase in mortgage rates results in home price appreciation that's 4 percentage points lower. For instance, a 1% increase in mortgage rates would change home price growth from 11 to 7%. Well, I've talked about what home price growth was doing, and we know what it's done for the last couple of years. Probably not likely to see the aggressive growth as rates rise that we've seen in the last couple of years, and keep that in mind. Last one here from Lynn Kiefer: when rates, with rising rates and expected to rise throughout 2023, it makes sense to obtain a purchase or refinance mortgage if you're still in good standing. So I think all that's important. I found one other fact, Johnny, that I want to show you before I turn it back over to you. I think specifically speaking to the mortgage business and to where we stand today, and do we see a crash coming? Freddie Mac published this week. In 2005, 2 out of 5 mortgages had an adjustable rate. Less than 1 out of 100 in 2021 had an adjustable rate mortgage. You know, we came through the housing crisis, and adjustable rate mortgages were given a bad name. And, you know, if you went into a mortgage company and asked for an adjustable rate or talked about it, you might get run out of the place, and people, were very much against them. Let me be clear. There most cases, there aren't bad financial products like an adjustable rate mortgage. There are misused financial products, no doubt. I would expect that we will see more people opting for an adjustable rate mortgage in a rising interest rate environment. And listen, if it makes sense for them and it's the right decision, then I'm not here to say they shouldn't do it. But we know all the, it's in the rear view with adjustable rates and other things like that in the past. I think we'll see that start to pick up here in this environment.
Yeah, definitely. And, I'd like to hear from people too on either Facebook or on the Zoom. Put it in the chat. I am hearing stories of people not qualifying for the amounts. They have to requalify now for a lower amount because of course, when they tell us that we're pre-approved for 500,000, we want to spend 500,000. We don't want to spend 400,000. Right? That's all up here.
Well, when you start looking at those homes and you have to go look at something else, I'll put myself there. We've done that,
Yeah, it's not fun. Yeah. It's definitely not fun. But are you seeing some of your clients, your customers, your buyers needing to requalify? Are you seeing any negative from the recent interest rates? So it'd be interesting to hear from that.
Yeah, I'd love to hear that in the chat if people are seeing that. But no doubt the rise, Johnny, we talked about this several weeks back, and you've done some great, short TikTok reels, things like that you do and are so good at. Talking about where we started the year at 3.1%, where we stand right now, knocking on the door of 5%, where we're going, and that's where you can bring in your opinion. You think we're going to 6? Do you think where do you think we're going? And then calculating that payment based on the average loan that'll give people real perspective on the increase in prices.
Yeah. And Michael says that some new builds are falling out of contract due to this, and some buyers are holding off, getting priced out relative to what they can now afford versus, that's what I'm talking about. I'm hearing some of those reports. And what does that mean? That's going to mean the people with the cash are going to be in that much better of a position, right?
Yeah. No doubt, rising prices, rising interest rates weakens buying power. So that's the reality.
It definitely takes it away. And even what's happening now is, I mean, years ago, you used to be able to come in, ask for concessions and all these other things. That this doesn't, I don't know if that even exists anymore.
Well, I don't think it does. People, anybody listening today can add that in the comments in the chat. But if you remember, in prior rising interest rate environments, we used to have the idea of a seller buy down. That used to be a concession that would happen. There's no reason to do a seller buy down right now that I can think of, unless you're having trouble selling the home.
And you're probably some weird place and have a weird home if that's the case. Hey, I want to say something too. David inspired me because I've been watching him up his video game. And here's something I can suggest to y'all. I saw David's video and I think it was a 9x16. So it was in Reels or TikTok or something else like that. And y'all can go to Canva. Every one of you can go to Canva. It's free for the basic account. And you can put yourself in a little work area, 9x16 or whatever, 720 by 1080, I think it is. And you can put a graphic down at the bottom. Any graphic that you want, right? Then you can record a quick little video. Then you can upload the video and even put it inside of a little computer screen if you want, right? You can get as creative as you want. Put a background to it of your area. And now you got yourself you download it as an MP4. Now you have a video with the graphic on it of you talking about the graphic. That's how easy this stuff is. Literally will take you 20 minutes. If you have any kind of skill in Canva, it'll take you 14 minutes, right? If you don't even know what you're doing, 20 minutes. It doesn't take that long, right? You just got to get the graphic, know what you're going to talk about, and record the video. Make it 30 seconds, 1 minute, right?
And Johnny, you know more about TikTok and Reels and all in that than I certainly do. But I will say this: what's worked for us at Keeping Current Matters. When people see that graphic, they stop because they go, I wonder what that is.
Yeah,
it's a little bit of a different deal.
Add and interrupt.
You can just talk through it and say, hey, here's what this is. Like, use one of the ones that I just did. Here's what happens when rates start to rise to home prices. If you're wondering, here's what's going on with inventory in our market right now. Here's what's happening with prices, and people want to see that. They want to see the facts, and they want to see the backup to it.
Nothing but the facts, man. They do, and they want to see some information. Everybody loves graphs. And listen, how do they find these graphs, David?
Yeah, if you're not a member of KCM, you can go to trykcm.com, start a free 14-day trial. We start out at $29 a month, get you all this information to be the educator in your market. This is everything happening in the market that you need to know what you're talking about.
I'm going to say something. I shared this out with my team a little while ago, my marketing team. I was watching this video from this agent that's trying to break on the scene. You might have heard of him, Ryan Serhant, right? Pretty big name, right? So he does it. He has this video, and I'm going to paraphrase. I don't remember exactly what he said, but he said, "You're the brand.
Yeah,
you're the trusted brand. You have to build you as a trusted brand." Something along those lines. Of course, he was selling his product. Right. Yeah. And everybody knows who Ryan Serhant is.
But he's right.
He's right. He's 100% right. So if you're not putting out good video branded to you, sounding better than everybody else, because I'm going to tell you what's going to happen. And this is no stab towards anybody at all. There is a lot of people that, just like when the gold rush happened in 1849, there was a whole bunch of people, speculators that took off. The same thing's happening in real estate where it's, this is easy money. I can show houses, right? There's a lot of people out there. A couple of years ago, it was 1.2 million. Now it's 1.5, 1.6 million. So we've added a whole lot of real estate agents. You look at areas like Florida that is blowing up. You're right. I mean, just the growth in Florida is crazy. When I did a feasibility study down there a couple of years back, the growth was going to be 6 million over a decade. Now we're at like 10 million over a decade. So they've increased the projection. Put yourself as the area expert. Make this part of your, in Six Sigma, they call it rhythms. What's your weekly rhythm? If your weekly rhythm is to put out just one of these videos per week, I can promise you that is going to have a bigger impact than not putting one out, right? But you start to put these out consistently, share them in your newsletter, right? That goes out to your clients, putting it out on Reels, so it goes out onto Facebook, putting it into TikTok, so it does whatever TikTok does. You will look more educated than all the other realtors that are just pointing at things. Just saying. But a lot of these agents aren't going to be here when the market gets hard, because right now it's still hard. But if you get the listings, if you can find the source of the listings, right? If you're willing to hustle with the buyers, you can do very well. I know a lot of people having the best years they've ever had this year, last year. Right? Because they're dialed in, because they have branding, because they are the brand. They're not dependent upon anything else. They're dependent upon their uniqueness. Take this information, just like with Explore My Town. It's not about us. It's about you. It's about positioning you to be a little bit different. Same thing with this. Take it, use Canva, make your videos, and put one a week, man. Dedicate 1 hour a week to putting out one educational video to the community, and you will have a long-term residual benefit from it.
Yep.
That's
absolutely. Johnny, I always love being together with you on Fridays. Julie, I saw your message in the chat. If you'll email me or anybody, David at Keeping Current Matters will get you the information.
That's it. And she was asking about the slides. So if y'all want the slides, email David at Keeping Current Matters. Send him 1,000 messages. Keep him busy all weekend. Anyways, y'all, David, thank you. Have a great weekend. Everybody, hope you enjoyed this. Lots of stuff happening out there, but the market's still good and we're still moving in that direction. So don't let all these crazy headlines scare you. The only reason there's a lack of pendings last month compared to history because of lack of listings.
We don't have anything to sell. We can't sell what we don't have.
Can't sell what we don't have. We can pre-sell it though. Everybody, thank you. David, thank you.
Take care.
Bye, all.
Bye.